Hello and welcome back. Hope you're good, doing well. So we are having non-farm payroll data is going to be released today, and dollar is just simply strong ahead of that. So, but before before going to look at the dollar index, let's look at this calendar. So the news is going to break out at 1:30, and numbers are going to be in the prediction is that the number is going to be 205k, while the previous month we had 209k, and average hourly earnings is being expected that they're gonna drop than the last month, and unemployment rate gonna pick up with 5.5%. So that's basically the Canada, all right. So this is the US one, 3.6%. So the same like last month, all right, 3.6%. So basically Fed wants that to tick higher, right? So Fed actually want these numbers to go higher, and jobs to drop. So if I'm gonna bring that, so this is what they want, the Fed. So they want this to slightly tick higher, go somewhere above 5%, right, to bring down the inflation, specifically the core inflation. And if you're going to look at this, this is also dropping, right? But they want to see significant drop in those numbers as well. So they want significant drop in these numbers as well. So average hourly earnings. All right. So simply they want labor market to cool down, to calm down, so that inflation, which is being driven right now, specifically by the wages, can come down. All right. So now let's look at the dollar index. So we were expecting a dollar index first we were expecting a counter trend move on the dollar from the lows, from the bottoms 2 weeks ago, right? So when DXY was setting up for a counter trend trade, we are still within that, and that wave is still happening. So let's look at the previous video analysis quickly, and then we're going to talk about what we can expect from the market next. And welcome back. And look at this weekly chart. This is dollar index basically, all right? So we are having, if I'm going to look at this 2-week chart, and when I look at this in 1984, so we have seen a tremendous strength and then drop, and then again in 2000, so we have seen tremendous strength and then again drop. All right, so we have seen dot-com bubble in 2000, and then it went lower, and then again in 2008 we have seen tremendous strength and then drop, and then since in 2011 we were having tremendous strength on the dollar. All right, and just recently from these areas, when that was the place where Fed was raising the interest rate. This was the place when Fed was cutting the interest rate, and inflation came. Then they started raising the interest rate, so we peaked on the dollar at there. Okay, and then what happened from that top? Dollar started to fall. All right, so dollar started to fall and dragging lower. So we know that inflation peaked, and a couple of rate hikes are in the pipeline. Inflation is significantly dropping to the downside aggressively. Core is still sticky, but headline inflation is just falling. So this might be a bigger, longer term drop on dollar index. Basically, that's the point. All right, so very much similar like this. Okay, very much similar like these drop we may experience on the dollar index. Okay, it can go all the way up to these lows. This possibility basically exists over there. That's a longer term drop we may experience. Okay, but right now we are not talking about that much bigger drop. Right now we are expecting a pullback opportunity. Okay, if I'm going to look at this daily time frame, we were expecting dollar to fall, and dollar nicely dropped over there, and then what happened, it held that low, that bottom, then went higher from that low. All right, so it went higher back to the top. Then we were expecting it to hold that top and then drop, but unfortunately we didn't see that top. All right, the price didn't test that top and broken, and then we were expecting this to either break down that and drag lower. So price broken down, and what happened, yeah, we were expecting it to either break or bounce. So we got a breakdown. Now price is just simply setting up for another pullback, very much similar like that. Okay, hopefully you understand the bigger picture, what happened on the bigger picture, what's happening on this, you know, lower time frame, and what we are expecting. This is going to be a pullback counter trend trade with that trend, the trend which we may see on a bigger time frame like 2-week chart, which I have just shown you. So what you are simply looking for, you are looking for a counter trend trade and a DXY to pull back. Let me pull out my moving averages simply. All right, so daily time frame moving averages. You're looking for DXY to go back within those moving averages, okay, within these moving averages like that. So if I'm gonna go to the lower time frame, trend is setting up, and we are having fat rate to see next week, and price is just simply setting up for upside. So you're looking these 15-minute corrections to hold and continue to keep pushing more higher. All right, so pullback, these pullbacks happen, price broke out. So you're looking for another pullback to happen and break out and continue to keep pushing more high. In case if it tests that low, does not continue, test that low, so still going to be a pullback opportunity, counter trend opportunity. All right, so we have seen that the dollar already gained. Okay, so that was the previous video analysis. If I'm gonna look at this chart and gonna go back to here. Okay, so we are having that wave, right? This wave is just hitting that hitting the moving averages, hitting the top, and these charts you know, did well. But you know, between that we were expecting dollar index to drop for another leg lower, you know, after the Fed rate scene. So I mean, dollar index was pushing higher when we had that update, right? And after that, we were expecting, you know, dollar to drop for another leg lower. We have seen drop on dollar index, but that drop didn't continue, and it went up for another leg higher. Yeah, so I have explained that in this, you know, video analysis, that we still can see one more leg higher. So that one more leg is about to complete, all right? And if I'm gonna pull out my moving averages, there we can see that the price is just simply struck, you know, setting within those moving averages, and we still can see slight more push up. Okay, the chart is very much clear. We still can see price to push all the way up to, come on, I was trying to hit this one, so pen, so highlighter was coming, so we still can see, you know, slight more push up. Alright, so if I'm going to pull out another chart over there on the right side, so which is going to be the oil still going higher. Yeah, so testing the previous top again. So there we can see that the oil, you know, tagging that high. So when the dollar was down, so we still can see, you know, very much similar retest. Because the point here is that this similar retest we can see the way oil is testing this top, right, and this flat formation. So we still can see that that's a bigger picture. Okay, that's a bigger picture. So we still can see similar formation here, but the move we are looking is the continuation to the downside on the dollar index. Okay, now let's look at the lower time frame, how you are looking that move. So basically the picture behind that move is clear, that the move, why we are looking that move. So the reason is the labor market. Okay, so the labor market is slowing down, and you know, we are expecting and even Fed is expecting labor market to slow down. So if we are going to see significant drop, yeah, in non-farm payrolls within these areas, and all these numbers are going to be really bad, all these three numbers are going to be very, very bad. Yeah, so that's actually what you are looking, labor market to slow down, numbers to be bad, right? Then you're looking dollar to break down very, very aggressively and continue to keep falling from those daily moving averages. Yeah, so on lower time frame, if we don't get a breakout to the downside, Okay, then simply another leg higher. I mean, if non-farm payroll numbers are going to be good, okay, then another push up, go all the way back to that top, upper line, upper channel line, and then again we'll see, draw from there. And if you're gonna get a sharp sell off from here, okay, that's what you are looking, sharp sell off, correct, and continue to keep dragging lower price to hold those daily moving averages, okay, and then drop and continue. So this structure gonna play out for a while, right? So good numbers, we're still going to see another leg higher on non-farm payroll, good numbers, good non-farm payroll numbers, another leg higher. All right, so bad numbers, right, which is Fed looking for, then sharp drop, correct, and continue to keep dragging lower, another leg lower for more downside. All right, so as long as price going to stay within that, we still can see small push up, as said, right? We still can see small push up. So when you are looking to trade, just keep that thing in mind, right? So you're looking, this is not our base case, all right now. Yeah, but again, strong labor market, definitely going to push for another leg higher, all right? So labor market is not slowing down, simply. That is looking, labor market slowed down, but labor market is not slowing down, right? Which is causing the dollar to gain. And right now we are having strength on the, bonds are falling, longer term bonds are falling after Fitch credit rating. Yeah, 10-year yields is still, longer term yields, 10-year yield is still pushing more higher, which is supporting the dollar, right? But bad numbers, bad numbers on non-farm payroll numbers, gonna drag dollar lower. So that's what you are looking, right? This is not our base case. So the base case is another leg lower all the way back to that bottom. Okay, so as explained, the structure is clearly shown on this daily time frame. What you're watching is the price to struggle under those moving averages, okay, during the non-farm payroll. Thank you.